Hey guys, welcome back to the channel. Today I wanted to talk about trading the market, our emotions in the market, and what we may feel at the worst possible time. Let me pull up a picture to explain what I mean. This is Alex, and he's doing something crazy. There's a documentary about his climb called Solo. Should the average person do something like this? So let's talk about the psychology of putting your money or your business at risk. You have probably seen the stock market emotional chart where the market starts out low. After a big crash, everybody's depressed. Everybody thinks the end of the world is here. Stock market will never go up, and then it starts moving up. Then there's a little bit of hope. The market dips down again. People have even more despair and fear and frustration. And as the market starts to climb higher and higher, you start having some hope. Then you start having excitement, just craziness, euphoria in the stock market. So that's the chart at the top. Then the market kind of dips down a little bit and you have a little shaking out. People are thinking, oh, it just needs to reset to go higher. And then the market tanks. I want to talk about that position right there. When the market falls and people have capitulation, fear, uncertainty, it's the end of the world. This happened just a week ago in the end of January of 2022. Some people got to the point where they sold everything they had and got out of the stock market entirely because they anticipated that the market's going to go a lot farther. Let's talk about the two main emotions in the stock market. The first one is greed. People don't like talking about greed, but that's kind of what makes a lot of people try and invest because they want to make money. I would look at it from a different perspective. Greed is really just fear, but fear of missing out. So fear of losing out a big opportunity is still fear, but you can call it greed. There's fear of success, fear that somebody else can be more successful, somebody else can outtrade you, somebody can have a more successful business. That's a fear. Or there's fear that you're gonna crash your business, you're gonna crash the stock market, or you're gonna crash your portfolio, or something's gonna crash. So those are kind of two big scary emotions to deal with. Fear of success, mainly in others, possibly in yourself, and fear of failure in what you're going to try and do. Seth Godin has a great book about this called The Dip. The Dip explores the idea that the worse that bottoming out is, the worse that place is for people emotionally, the more likely you can make that into a opportunity to make money. Let's talk about the stock market from the perspective of the dip. When everything is going great, a blind monkey will make money in the stock market. The last year and a half, anything you throw out in the market has been making money. Stupid companies. I mean, even if it's a company that's really a turd, it doesn't matter. Everything has been going up. But that is starting to change. Over the last couple weeks, we've all seen the market took a big hit. A lot of people, their dip was so bad, that area that they were in emotionally was so painful that they sold out of the entire position that they held. But that position, that dip, that painful place, that's where you can make money. The average person probably shouldn't be trying to invest in and out of the stock market. The average person is much better off just investing consistently into an index fund without trying to time the market up or down. You will make more money than 95% of professionals in a 10-year period. But if you really want to try and figure out this trading thing, invest when everyone's fearful. Looking back at 2008, most investors say, if I could go back in time, I would invest like crazy at that time and I would buy up everything and make a ton of money. Well, 2008 repeated itself, sort of, in 2020. COVID hit, the Rona, and people didn't know how bad things were gonna get. So as the market started falling in February, and as it continued falling in March, everybody's panicking. All the headlines are horrible. It's the end of the world. The whole world is locked down. The economy is at a standstill. Everything is bad. Both her and I decided this is the time to invest. So we even took money out against the house to invest in the market as a whole. We did not try and figure out which stock to pick. We put money into the whole entire market when everyone was fearful. On April 8th, shortly after the bottom of the stock market, there was an article that the market is going to have a 79 to 89% crash from top to bottom. So basically, Wall Street, a bunch of people in the news, they were expecting that as the market started going up, it was a fake out rally and it was going to drop more. there was so much fear and negativity. Everybody at work I talked to about investing basically looked at me like I was crazy investing at a time like that. So in 2008, we can think that, man, I would have invested, I would have put a bunch of money in there, it would have been awesome. But when 2020 crash came, there was so much fear and negativity. That dip was so emotionally draining that most people did not want to approach investing. To me, that kind of boggles my mind. If I want to buy a nice pair of running shoes for my wife and I, and they cost $100 a piece, all of a sudden they're on sale for $50, I'm going to spend $100 to buy 2 pairs. But when the stock market is on sale at 50% off or maybe 30% off, instead of buying more, people panic. I want to talk a little bit more about the Corona crash, because it can be easy to say, oh, I went in and I bought a whole bunch of stuff. I even put the house on the line. But guys, at the worst, on March 23rd, 2020, overall, my portfolio was down over $150,000. I'm not that rich. That's a lot of money. Most of my money ended up being in the stock market, and about half of it was borrowed money. So to be able to say that I invested without any fear, that would be a lie. There was a lot of emotions, but I had to try and put those emotions aside and look at the market from a perspective of a neutral party. That's hard. When you have $150,000 lost and tied up in that black hole of a stock market that just crashed like crazy, to be able to look at that as a buying opportunity, that's not an easy thing to do. But that's the most important time not to jump. That's the most important time not to panic. That's the most important time to be able to just follow your trading plan. The point of this video is investing for the long term in index fund is the way to go. But if you desire to start trading either individual stocks or timing in and out of the market, I want to give you 2 statistics. More than 80% of active traders consistently lose money. Out of those 20% that don't consistently lose, only 1% consistently make a high enough return to be able to live on. 1% of active traders can actually live off their trading. Those are not good odds. So invest in index fund for the long term. But if you want to try and figure out how to trade in the market, I have 3 tips that you can try and use to improve your success in the stock market. The first tip is have a trading plan and document it. You want to be able to write out the steps that you would take, write out the setups that you would follow, write out at what point you would be buying, at what point you would be selling, and write those things down. If you can document your emotions of when you're putting a trade in, your expectation, what you think will happen, and the result of that trade, if you can document that over time, you're going to see patterns that make sense for you. I made a lot of money in 2 stocks, but there was 20 stocks that I lost money in. For myself, going through all the notes that I had, I figured out picking individual stocks, not for me. Let me show you what I mean. This is my little binder of trading. All of these different charts that I followed, all these trades, all my emotions, everything's written out, and it can be summed up with my trading plan here on the first page. It may sound a little silly to you guys, but most of this is actually not financial information. It's more psychology. Center yourself. Make sure that you're not crazy fearful, greedy, or in doubt. That's my first rule. Second rule, what is the market currently doing? You take a look at that. Rule number 4, check emotions again. Have you lost a lot lately? Do you have fear blocking seeing opportunity? Or have you won a lot? Are you overconfident? Are you overextending your risk? These are rules that I follow as a result of what worked and what didn't work in my trading. The second point is trade your experience, not somebody else's. I know what makes me money in the stock market because I know my emotional weaknesses and strengths. I know the things that I will get too caught up in and lose money. If I go after individual stocks, or if I start to watch those penny stocks and biotech stocks, they go up and down like crazy, and I get chopped up. I know what works for me and what doesn't work for me because I have a huge amount of information to look through of what worked and didn't work in the past. So have a trading plan, document it, and trade your style. And once you have that established, stick to your patterns. Don't follow other people. If I know what makes me money, But some guy on YouTube just said, hey, Palantir's going to the moon, or Tattoo Chef, or Corsair Gaming. There's a lot of companies out there that people promote on YouTube. But whatever I don't understand, whatever's not in my trading plan, I don't touch. I don't bother with it. Maybe I'm missing out, but I know that if I stick to my plan, that's what will help me make the most money. So have a trading plan and document it. Follow your experience, not somebody else's tip. And the last rule that I have, you can either be right more often or you can make money. There's a lot of times when I think I can figure out something in the stock market, and if I stick to my belief, I end up losing money. If I think this stock is going way up there and it starts going down, I can have a choice of either cutting it off or keep putting more and more money in. Now, I have a little confession for you guys. There's a reason why I don't trade individual stocks. If you look at the stock market as a whole, it has gone up in an upward trajectory. There's a lot of dips and twists and crazy shakes on the way, but overall, the trajectory is up. The house wins. So if you tend to bet with the stock market, long term, you will make money, or at least more likely to make money. But if you bet on individual stocks, how do you know which one's going to be successful and which one not? Everybody loves to talk about how Tesla was a huge success for some investors. Sure, that's awesome. But how many people knew about Tesla when it was first starting out? How many people invested in the beginning of Tesla? How many are piling in now? A whole lot of investors. Let's take a look at something like a car, for example. There was over 100 car companies that started off when cars became a thing. How many of them survived into the 70s and 80s? I think it was 5. How many of them are around today? You have GM and you have Ford. And GM went bankrupt in 2008. What does that mean for an individual investor? You can have the right industry, you can know that amazing things are coming in a certain field, but do you know the exactly right stock that's going to take off? Because there's going to be 100. 5 of them will make it big, but the rest might go to nothing. So you can either be right or you can make money. If you think that this company is going to make a ton of money and you keep putting money in as it's dropping, you might end up at zero with nothing left. But if you invest in the stock market and it drops 50%, well, that sucks. That's a huge drop. But you load up the boat, you know that in 2 or 3 years, the stock market will be higher. It might take 5 years for it to be higher, but it will be higher than where it is today. The last point that I want to make is nobody knows what the market is going to do tomorrow. Nobody knows what it's going to do next week. Nobody knows what it's going to do next year. We know in 10 years it'll be higher, but we don't know the exact pathway it's going to take. The person that's telling you that they know exactly or they know what's going on and why the market went down and why it's going back up, they're full of baloney. You should learn to be cautious when somebody is telling you they know exactly why the market's moving. The person that is more sure of why the market is doing what it is going to end up very wrong or losing a lot of money. Or maybe they'll just make you lose a lot of money. So as always, I'm going to show you guys my Roth IRA just so you can kind of see what my money's been doing over the last couple years. The last month has been a little shaky. Let me pull up the video. So my account started off with about $20,000 2 years ago. And as you see, it peaked about $24,000 and then it dips down all the way to $7,200 in March of 2020. I added some more money into my Roth and then it started going up like crazy up to $43,000. Then it tanks down to $30,000. All these back and forth moves are very painful. $40,000 back to $30,000 and then all the way up to about $57,000. All of these were a lot of emotions, but being able just to watch my money and not doing a single thing, that is what created the most value. Sitting on my butt, sitting on my hands, and just watching it do its thing was very hard. At the end of the year, there was a nice, awesome rally here, all the way up to about $110,000, $115,000. And here we see a big drop that happened in January. I was down to $79,000 in January, just last week. But because I didn't sell, I kept my positions, we're back up to $98,000. So I hope you guys can learn something from this video. If you decide to actively trade in the market, or at least become a fairly active investor over a long term, Document your journey. Put down your emotions on a notebook, piece of paper, or in some kind of documented way so you can watch what works and what doesn't work. The best way that you can make money is invest long term into the stock market, into an index fund, without timing the market at all. You will guarantee to beat 95% of professionals. As always, thank you guys for being here, spending your time with me. If you liked the video, hit that thumbs up button, pass it on to a friend. I wish you all well. Love you guys. Artie out. See you guys next week. Bye.